Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, stocks are coming off of a mixed session and pointing to higher opens today as the first full week of trade this year is underway. Of course, there's no shortage of news to follow, as we always do here on NYSE TV Live. We're covering earnings season deals and data. And we'll have more on the data front soon. But when it comes to deals, Flowco, that's an energy equipment provider, is set to debut here at the Stock Exchange on Thursday. And that comes after a little bit of a merger Monday activity following Johnson & Johnson announcing yesterday a $14 billion deal to buy Intra-Cellular Therapies. Well, as investors pay attention to the pace of growth this week, big NYSE-listed banks like JPMorgan Chase and Citigroup will also report results. And investors are waiting to hear from the banks after what had been a consolidation for equities of late. Let's take a look at what else is on tap in today's show. Wall Street is still reacting to some of the biggest innovations at this year's Consumer Electronics Show. Gary Shapiro, the president of the Consumer Technology Association, or CTA, will tell us what he has seen when it comes to the advancement of artificial intelligence and what we should know ahead of CES next year. Meanwhile, retail is still in focus here at the New York City show at the Javits Center. The National Retail Federation's annual conference is entering its final day. And NRF Executive Director of Research, Mark Matthews, is going to break down the biggest headlines coming out of the event and what it could mean for the sector. Plus, the CEO of Daily Harvest, Ricky Silver, is going to tell us how his company is on a mission to make it easier to eat more sustainable fruits and vegetables, and how a new product is expected to boost results. Well, we are always keeping a close eye on the markets here on NYSE TV Live, and this morning investors are digesting fresh inflation data that arrived just about a half hour ago. This was good news for markets. That's because the numbers came in a little bit lighter than expected, meaning that the pace of price gains is cooling. That's what we want to see. That's what investors want to see. So the headline number coming in at a gain of 3.3% from the same time a year ago. The estimate was 3.5%. On a month-over-month basis, in December, it was up 0.2% from November. The estimate was double that. And if you exclude those volatile food and energy categories, the core PPI, as it's called, year-on-year was up 3.5%, below the estimate of 3.8%. And month-over-month, that figure was unchanged, better than the estimate of a 0.3% gain. We do see stock futures rising in the wake of that news, and we'll have that market open in just about 30 minutes' time. Well, joining me now to talk more about the markets and interpret this data is Seamus Smythe, Chief Economist at Virtus Partners. Seamus, it's great to have you on the show this morning, and investors are certainly welcoming this inflation read this morning. What is your takeaway?
And I think what we're seeing is the inflation progress broadly continuing. I think the numbers, if you dig underneath the surface a bit and sort of the parts of the report that matter for the inflation that the Fed actually cares about, the CPI and the PCE, it's a little bit less friendly. Some of the details there, I think, are not quite as good as what we're seeing. But sort of a little bit better news than we've gotten out of some of the more recent ones. But again, I think what really is going to matter is what we actually get from the CPI tomorrow for thinking about the Fed and how they want to see things go.
You know, many people have said, Seamus, that PPI, the Producer Price Index, what businesses pay, are these wholesale prices, the pace of price gains that this particular index does measure today, is more of a forward-looking indicator, a leading indicator perhaps by about 6 months as to what we might see with CPI. Do you agree with that, and what could that portend for consumer prices?
I think you have to be very careful with that. The links can be a little bit tenuous, and the sort of what you see out of there doesn't necessarily always translate. Again, I do think what you're seeing on the inflation front has broadly been good news, and this is a little bit of continuation of that. But I don't want to get too excited about the PPI just because the links just aren't as tight as you would hope that they would be.
Does this signal that the economy is strong?
I think the economy is strong, and I think that's very clear on the activity side. I think one of the reasons why you're seeing a little bit less progress on the inflation side over the last 3 to 6 months than you'd hope for is that the economy has remained strong. You're potentially seeing a bit of a pick back up in the pace of job gains as we've gone into the end of the year, and overall consumption and overall economic activity looks extremely solid as we go forward. GDP continuing to track north of 2%, which sort of given where we are is an extremely positive one. So yes, very much so I think this is related to the overall strength of the economy.
You mentioned we got the consumer price index data for December. That's out tomorrow morning before the market opens. Of course, our viewers will be following that closely, and we'll be covering it here on our show. And that's just 2 weeks ahead of the Fed decision at the end of January. Seamus, what do you think is the right move from the Fed come 2 weeks' time with these new data inputs?
I think that you have a Fed that is looking at sort of the overall picture, seeing the little bit of backsliding that we've gotten in inflation over the back half of 2024, and is looking to be a little bit more cautious, and has thinking that they are in a much better position with the amount of rate reductions they've already done, and wanting to gather a bit more data as they go forward. So I think and I think this is pretty clearly indicated by Powell at the last press conference. What you're looking at is sort of taking a little bit of time to assess where we're going and not having to cut at this next meeting. Instead, sort of trying to understand a little bit more about that path of inflation. And I think they're very interested in some of the early 2025 readings that we're going to get on inflation. They're going to be very informative about where the path is, because if you recall last year, we had a little bit of an upside surprise at the beginning of the year in inflation readings. And I think the Fed probably has some concerns that some of the same factors that pushed up there could occur again, and we'll want to see what they get before sort of making the further moves.
Of course, the Fed has a dual mandate, right? So it sets interest rates based on inflation as one input, the other input being jobs. And the jobs report Friday was a blowout. 256,000 jobs added in the month of December, 101,000 more than expected, for a total of 2.2 million job additions in 2024. Do you expect this momentum to continue at the same pace?
I don't think you can expect it to continue at the same pace as we go forward. I think there are a variety of reasons that are there. One of them being the sort of lag tightening that we have seen from the Fed continuing to feed through. And if you look at what you saw through the course of 2024, you saw a gradual slowdown in the pace of job gains, albeit to a still very good level. But then also when you look forward, I think you have to consider the amount of immigration that has been coming into the country, that having been a major factor in helping keep job gains as strong as they have been over the past 18 months or so, that having already come down towards the tail end of the Biden administration and likely to come down further as we go into the Trump administration, and going to get a slower pace of job gains with that lower pace of immigration.
Seamus Smythe, Chief Economist at Virtues Partners. Seamus, thank you so much for joining, of course, amid a big data release.
My pleasure.
All right, everyone, well, stay with us, because up next, the Consumer Electronics Show for this year might be behind us, but the tech innovations from this year's events are only taking off. Gary Shapiro, the president of the Consumer Technology Association, will join us up next.
Obvious Ventures is a firm renowned for its world-positive investing approach, focusing on companies that aim to make a meaningful impact across industries, and has been instrumental in backing some companies that innovate in sectors from food and energy to health and beyond. To talk more about the trends and technologies that are reshaping industries while fostering positive change is the co-founder on this episode of Taking Stock. So I do want to talk to you about your world positive approach. Talk to me about this concept, the motivation behind starting it, and what it really means.
So we started Obvious 10 years ago, and we started with this contrarian idea that the biggest companies of our time would be companies solving humanity's toughest problems. So think about the climate crisis, chronic disease, income inequality. We want to use venture capital to fund breakthrough technologies to improve and solve those problems, to make every American's life better, And that's what we mean by world positive venture capital.
And talk to me about the industries that you focus on that help achieve your mission and your goal.
Well, we invest in these three pillars. Planetary health, so that's about decarbonizing the economy, generating renewable energy, electrifying transportation. We invest in human health, and that's everything from better for you food to better healthcare companies and better biotech companies. And then lastly, we invest in economic health. And that's really about helping people find and do their best work. How do we help Americans get better jobs, get better trained?
And across these three sectors, what are the biggest trends you're noticing right now? And how do you identify which companies you want to invest in?
Well, there's one trend that spans all three of those pillars, and it goes by two letters, AI. I suspect this has come up in other conversations, but we're seeing AI as a major technology disruptor. And in particular for us in planetary health and human health,
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, tech gadgets and innovations took center stage in Las Vegas last week during the Consumer Electronics Show. For more, I want to bring in my colleague, Trinity Chavez. Trinity, good morning.
Hey, Kristen, good morning. That's right, innovation, emerging technology, and of course, advancements in AI. We're in the spotlight this past week at CES, and according to the Consumer Technology Association, more than 140,000 people attended the event. The organization adds that there was about 4,500 exhibitors and over 6,000 media members on hand at this event, CES 2025. Joining me now to talk more about this is Gary Shapiro, president of the Consumer Technology Association. Gary, it's great to have you. Good morning.
Good morning. How are you?
Absolutely. It's great. It's great. I'm great. I just want to say congratulations. As we mentioned, that CES 2025 saw over 141,000 attendees and over 4,500 exhibitors. From your perspective, what were the biggest themes that were coming out this week at CES 2025?
Well, it was probably our most successful event in terms of getting the world together to focus on innovation. We had over 50,000 people just from outside the United States, making it the biggest confab sporting event or anything in terms of global attendance. But these are executives. It's not open to consumers. There was over 6,000 media there. But the themes were definitely generative AI was what stole the show. But there's also digital health, mobility, disability access, and also responding to the needs of people through agriculture, close to home, all sorts of different things that really make a difference in normal people's lives.
And what would you say was the biggest difference from this year's event compared to last year's?
Well, there were several. First, we had amazingly speakers in huge forum, whether it was NVIDIA's CEO, Jensen Huang, who actually spoke before almost 8,000 or 9,000 people live in the facility, as well as probably hundreds of thousands more around the world, or Delta's CEO, Ed Bastian, who was the first ever trade show keynote speaker in the Sphere in Las Vegas, where he reached several thousand people and showed what a tech company Delta is. But we also focused on energy, not creation, as well as efficiency, because tech products, especially generative AI, electric cars, quantum need energy. And speaking of quantum, it was the first time we really focused on quantum computing at CES and talked about how it's coming down the road and its potential in the future.
And Gary, I do want to point out to our viewers that about 40% of attendees were from over 150 countries, and over 60% of Fortune 500 companies were participating in CES 2025. Talk to us more about the innovations that you're seeing abroad.
Well, it's global. I mean, the U.S. is obviously a huge leader, but other countries are playing. They're fighting for who will be number one in artificial intelligence. And we saw everyone at CES, from AMD, and obviously a U.S. company, to Hisense, LG, NVIDIA, Qualcomm, Samsung, Siemens, TCL, and companies like Accenture. Julie Sweet, the CEO, was there talking about the future in AI. But digital health, since COVID, has been increasingly important. Technology is actually supplementing the shortage of human beings and providing solutions. And we expect generative AI to provide basically personalized solution relatively soon. mobility was absolutely huge. Everyone from BMW and Bosch to John Deere and Caterpillar, as well as Oshkosh, Garmin, Honda. So many of the major car companies were there, and focusing on how we get around more efficiently, using less energy, and smarter to reduce accidents. I mentioned quantum, but several different exhibitors were there from around the world, but sustainability was also an overwhelming theme at the show. Everyone's focusing on minimizing energy usage, but also minimizing the impact on the environment of these technologies, which actually save people time and money.
And Gary, as I mentioned earlier, over 6,000 individual media was there on the ground for CES. And, this event generates more than 27,000 pieces of news. So not to mention millions of social posts across every platform that you can imagine. And this is all happening from CES. Topics like sustainability, digital equity, and emerging technologies are also key to this event. So talk to us more about what you heard last week and some of the tech solutions being created in each of those areas.
Well, it's great that you note that, because it's one of the world's largest marketing events, where CMOs from around the world gather to see how technology is affecting their lives. We call it C-Space. We also have an area just for startups, because they're so important in the ecosystem. Eureka Park had over 1,200 startups from around the world, and they really provide so much excitement. Everyone from Shark Tank to basically the heads of companies like Walmart and others go there to see what is coming down the pike, and either to invest in, be a partner of, or a first customer for. So a lot is coming down that's new, because basically there's so much innovation. We're at the infant stage of this great leap with AI and with quantum that will make the difference in our lives. And there's a lot of smart entrepreneurs which are gathering and figuring it out, and you must partner to be a tech company today, and every company is a tech company.
And you mentioned earlier on about AI, and that was a major theme this year at CES. But talk to me more specifically about how this technology is transforming industries like healthcare and mobility.
Well, actually, AI is more from the enterprise point of view, which is a large part of CES. What you see is productivity focus, doing things differently so you can redeploy workers for more creative endeavors. At the consumer level, though, it's more about personalization. We're seeing that in the computer area, the desktop, the laptop, as well as other devices, which allow customization through generative AI and helping people find solutions. But again, this is just the infancy stage, and there's so much more to come.
And Gary, just briefly, we have about 30 seconds left here. CES 2026, the planning is underway. Talk to us about what we can expect for next year.
Well, it's not only underway, I'd say a good portion of the show is already sold. Many companies have expressed an interest in coming back bigger and better. The show has been, as I say, phenomenally successful. It'll be in Las Vegas in early January, where I know you are from and should return to. So that's, if we have you there, it'll be a great show.
Yes, I am planning on being there. Of course, I was born and raised, so this is something that's near and dear to my heart too. So thank you so much for coming on the show to talk to us more about this extraordinary event, and we look forward to having you back on next year.
Thank you.
Again, that was Gary Shapiro, president of the Consumer Technology Association. Now, while tech was in the spotlight last week, a major retail conference in New York City is also making headlines this week. Stay tuned for all of those details.
Welcome to Floor Talk. It's great to have you on the show today.
It's great to be here, Judy, and it's a real privilege to talk to you.
So you are the CEO of Agilent.
Yes.
Tell me about the company and what you do.
We're the people behind the scenes that keep your water safe, your food safe. We advance therapeutics, so we test pharma and biopharmaceutical drugs as they're released. So we're the people behind the scenes keeping the world safe.
Now, you held your investor day today at the New York Stock Exchange, and you introduced a new strategy. So tell me about that strategy and what it means for your stakeholders and the industries that you serve.
We're becoming more customer-first strategy, so it's a customer-led strategy led with our markets. So our three main markets are pharma, biopharma, clinical and diagnostics and applied. So we're really leading with our markets and seeing how we can bring more solutions to our customers and faster innovation across these markets. So we're really excited about it, and we've also launched a transformation in the company called Ignite. And that's really to help with our customers, making it easier for them to do business with us, for employees, making it easier for employees to work and be more productive, of course, and for customers and our shareholders, of course, to continue our growth.
Now, can you share more about these high growth opportunities and the solutions you're providing for them?
Yeah, I can share one really good example. So Forever Chemicals, you probably heard of that, PFAS molecules and compounds. We test for that globally, so it's a big emerging business for us. So we are the ones that help testing labs test for these molecules. And to give you a sense of our detection limits on our equipment, think about a drop of water in an Olympic-sized swimming pool. That's the level of detection we can do for these compounds, and it's, of course, moving to different modalities, so we're there to really test for these compounds.
Now, today you rang the opening bell to mark the 25th anniversary as a public company.
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange. Now, retail's big show is underway at Jacob Javits Center here in New York City. With over 40,000 attendees and $75 million in economic impact for the city, it's the retail industry's biggest stage. One key highlight: NRF's new Consumer Insights Studio, a game-changing platform helping retailers decode consumer behavior like never before. Here to talk more about this is Mark Matthews. He is Executive Director of Research at the National Retail Federation. Mark, it's great to have you.
Thank you so much for having me. It's my pleasure.
Absolutely. So NRF 2025 is set to attract over 40,000 attendees, and like I said in the lead-in, generates $75 million for the city. How has this conference evolved over the years to become such a significant event for the city and the whole retail industry?
Well, it's amazing, and I wish you could be here to see it. As you said, 40,000 people, 1,000 exhibitors, people from 100 different countries. I think what's really important to understand is how important retail is to the U.S. economy. It has a tremendous impact, not just on big cities and small cities. All over the country, you find retail stores, and the importance of our industry has just grown and grown and grown. And therefore, anytime you have a retail event, you attract all sorts of people because retail has a huge impact, not just on the people who shop, but the entire communities in which the retail businesses operate.
What are some of the major themes and trends being, that are in the spotlight at NRF 2025 so far?
Yeah, well, what's interesting is that nobody is closer to the consumer than the retailer, and understanding the consumer is paramount. The challenge is that the consumer is constantly changing. Opinions are changing, psyche's changing. You have Gen Z and their behavior is different, and then all of a sudden you have Gen Alpha now. So understanding how the consumer is behaving is so important, and we're actually NRF is jointly launching a product with our partners Affinity Solutions and Pixis, which is part of Bain & Company, to help retailers understand the consumer better. It's called the Consumer Insights Studio, and having insights into consumer behavior, what they're doing, what they're thinking, is psyche turning into action, all those things are incredibly important to be competitive in what's an amazingly dynamic, ever-changing industry.
And speaking of insights into consumer behavior, what would you say is the current state of the retail industry, given all of your analysis there on the ground?
It's actually pretty strong. We had a phenomenal holiday season. We saw retail sales grow 5% in November and December over last year, which is incredible given that there is no inflation in retail goods. Most of the inflation is in services. Retail goods are actually slightly in deflation. So retailers actually have to sell more to see a gain. The consumer is in pretty good shape, I gotta say. Household wealth is at $160 trillion, the highest level it's ever been. And most importantly, employment is strong and wage growth is above inflation. For the last 21 months, we've had wages above inflation, and that is fueling a consumer that is going out and shopping.
You know, I do want to talk to you about how you mentioned that there's more than 1,000 exhibitors showcasing the latest technologies. What emerging innovations or solutions are you most excited about for NRF 2025?
Well, yeah, I hate to be cliche, but you know, if you look around, the two letters AI are pretty much everywhere, and I think it's really important because if you understand how difficult it is to understand consumer behavior and the billions and billions of data points that you need to analyze to understand what the consumer is doing, having the power of AI to help you dig through all that data and generate actionable insights, that is incredibly important. You know, if we think about, you know, something that consumers tell us that they care about sustainability and they care about ethical sourcing, you know, those are true. They care about it, but does that translate into actual buying behavior? That's not always the case. So being able to understand those distinctions, being able to understand, okay, my consumer feels this way, but are they acting that way? Because retailers have to be ahead of the consumer. They have to buy before the consumer buys. So being able to make those decisions accurately makes a huge difference.
Now, since you did mention AI, but as Executive Director of Research, what are the key insights or findings from NRF's recent studies that will take center stage this week, and how do you see the role of data-driven decision-making evolving for retailers in 2025 and beyond?
Well, you know, I really do believe that, you know, we are seeing a second data revolution. You know, it used to be that retailers just focused on what the consumer was doing within their own confines, within their stores. Nobody understood that behavior better. Now retailers are out looking beyond the store, beyond, you know, their own doors to see what the consumer is doing when they're not shopping with them. How are they behaving? Where are they shopping when they're not shopping with me? What are they doing? If my sales are increasing in a certain area, is it because my marketing campaign is great in that area? Is it because the consumer loves me in that area? Or is everybody doing well in that area? You know, is it a rising tide lifting all boats? So being able to dig into those insights is so critical for a retailer these days.
Thank you so much. Again, Mark Matthews, Executive Director of Research at the National Retail Federation. Great to have you.
Thank you so much.
Now the opening bell is up next, so don't go anywhere. On this episode of Taking Stock, we are thrilled to have May Habib join us. She is the CEO and co-founder of Ryder. We're going to be speaking to her about how they are bringing generative AI to large enterprises. Let's get started.
We've been in generative AI for the last 4 years, working on bringing generative AI to the enterprise. And what we've learned from folks is they need a full solution. LLMs are very powerful, but not enough to very quickly get to value on these mission-critical workflows.
And you know, you recently announced a $200 million Series C funding with some of the biggest and most influential companies backing this effort. Talk to me more about the partnership and why it was now the right time to have this fundraise.
We had some incredible corporates join the round: Salesforce, Adobe, Workday, IBM. And there's a real realization that enterprise generative AI, especially where we're going on agentic workflows, requires a real understanding of these real world mission critical flows that is just much more complex than folks thought. And I think being able to stitch together multiple systems, multiple departments with generative AI, rewiring these flows, requires really a coalition. And that's what is so exciting about the Series C that we raised.
What are your plans for this new funding round?
Certainly expand the team, expand our footprint, but invest in this next generation of models. Action oriented models that are capable of autonomous action inside of the enterprise with reliability, consistency, security that enterprises need.
Talk to me about how your past experiences have helped shape the ethos of your company today.
I grew up in a small family business and learned a lot about the importance of staying really close to the details.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Schiller here in studio at the Stock Exchange. Well, in just a moment, Creative Spirits will ring the opening bell and kick off today's session. And I do want to bring in my colleague, Trinity Chavez, with more on the other side of the bell. But let's take a look at that podium, of course, as we are awaiting the open of trade to get underway. All right, stock trading is officially underway here at the New York Stock Exchange. Investors, of course, reacting to the latest inflation data. We'll cover that here with my markets guest in just a moment as Creative Spirits opens the markets. All right, well, diving in, of course, we've got a busy week of data, deals, and earnings. And joining me now is Shelby McFadden, investment analyst at Motley Fool Asset Management. Shelby, welcome.
Thanks for having me.
It's great to have you on the show here, and we should start with inflation because, of course, traders reacting positively to the data that we got this morning. Is that warranted?
Yeah, you know, I think at this point there's a little bit of, well, a lot of pricing in that's happened so far. And then when we think about what's really driving the data, we think of that sort of upper third part of the American households tending to be driving a lot of the average. I think they're comfortable with what that might mean as we sort of dig into the data and realizing also that the Fed has their path and they're set on it. The yield, the 10-year, has been reflecting any sort of expectations that that we have for the long-term economy for the long time. So I think the way that they're reacting is that they're feeling a bit more comfortable with setting their sort of expectations and doing a lot less whiplashing at this point because we saw a lot of that for 18 months or so. And I think they're just kind of in the mood to say, you know what, this is roughly around where the new pricing level is going to be. No need to kind of fly off the rails in any one direction.
We've heard a lot of market participants say as we have approached 2025 and now just a few weeks into 2025 that we should expect volatility this year, the third year of the bull market, still sticky inflation and quite strong growth according to the data. Do you agree with that? And if so, how should investors prepare to manage that?
Absolutely. I think we could still see volatility. I wouldn't necessarily say it's because of how long the bull market's been running, because it's a little bit arbitrary. But it could be the simple fact that we're kind of entering a new regime for interest rates. Americans are increasingly financing their lifestyle. And then we're also going into a new administration that could be pretty drastic for capital markets in terms of just balance sheets, reinvestment in the business, tax implications. And so I think this is a time where we are kind of at that crossing point of, well, yeah, it's been a long bull market, but also there's some really big changes that are on their way.
Yeah, and I want to talk more about earnings because, of course, earnings season will kick off in earnest with the big banks reporting as the season always does. Tomorrow we'll hear from JP Morgan Chase, Citigroup, Wells Fargo, I believe, as well. What is your expectation when it comes to those fourth quarter results?
I'm thinking the banks are going to be generally positive. We saw a couple years ago, and it really wasn't the big banks, it was the smaller mid-sized banks, had their big sort of sell-off moment. They had to take a look, do a lot of soul searching, refigure out their balance sheets, but we didn't see that issue as much with the larger banks. So I think we're not as much concerned about interest rates starting to eat at their profitability. I imagine they've really kind of figured out a game plan. I think what we will hear is that they're adjusting their models most likely, rethinking how they're underwriting things to adjust to this new normal. But the fact is it is still really attractive for people to want to be involved in cash and higher yielding instruments, but also as the Fed ticks those rates down even just slightly, it gets more attractive for people to be involved in stocks and want to put their money to work, whether that's in private credit, or just back in the stock market or other different ways of investing. So I think that's what we're going to see as well, is that them starting to make that adjustment to what investors are wanting to do with their cash and maybe wanting to pull a little bit of it out of those out of fixed income a bit.
So certainly, I think you did a great job there of explaining what it means for the consumer, right, in terms of where they can get yield. If rates do maintain about where they are right now, what does that mean for banks' balance sheets in terms of the net interest income, the money that they make on some of these loans?
Right. You know, it's interesting because if they can settle into this new normal where they're giving, let's say, in the 4s, maybe low 4s for a high yield savings account, maybe it's even upper 3s if it's a smaller institution, and then still able to make those loans out at couple hundred basis points higher, which is usually the situation, and then we know that mortgage rates are definitely a few hundred basis points higher, they will still be able to make that margin. And the other thing too is that the credit quality of the average American is not coming down, but we do know that folks are stretching a little bit. So if the underwriting starts to change and the models start to reflect what the consumers are using, how much cash and savings they do or do not have, banks will be able to sort of increase that lending rate and still maintain that margin. I think it was a little bit harder in the earlier days where it was kind of like, okay, how do we've got this really big shoot up in these deposit rates we need to offer, and credit quality is still solid, so how do we get that margin? But I think at this point, with them settling down a little bit, being able to bring people back down into the high 3s, maybe by the end of this year or early next, they can probably still maintain that margin.
I do want to talk about Walmart quickly. It's a stock that has gotten a lot of positive attention, in fact, in the past 6 months or so, and a company that did have a presence at the Consumer Electronics Show. From a stock picking perspective, is Walmart on your radar?
Yeah, Walmart is a favorite of ours. It's in some of our SMAs, and it's also in TMFE. It's our capital efficiency ETF. They provide a lot of value for the consumer. They're really, really reliable with how they reinvest capital. It's a little bit rich right now, but they're doing for the American what they really need, and that's providing comfort and staple needs at a reasonable price. So we do really like Walmart.
Shelby McFadden, investment analyst at Motley Fool Asset Management. Shelby, thanks so much for joining.
Of course.
It's great to have you. All right, well, stay with us because up next, the CEO of Daily Harvest will join us to discuss the launch of a new product as that company looks to make it easier to eat sustainably grown food. Stay with us.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, from navigating the challenges of natural disasters to tackling climate change and revolutionizing the way we eat, Daily Harvest is on a mission to improve both human and planetary health. Joining us now to discuss everything from their latest high-protein smoothies to the broader impact of sustainable agriculture is Ricky Silver, the CEO of Daily Harvest. Ricky, welcome to the show. Thanks for joining us today.
Thanks for having me.
Absolutely. And you know, I do want to start this conversation by the LA wildfires. Obviously, it's ravishing communities there. Devastating and heartbreaking to see all of this unfolding on national television, you know, as many of us are referring to. But how is Daily Harvest supporting the communities out there in LA through your business?
Yeah, it's a great place to start because it's top of mind for everyone. The devastation and displacement that we're seeing is just truly awful. And, you know, first thing we know in these moments of destabilization, people are looking, do I have shelter, right? Do I have access to food? You know, what decision do I have to make next? And so first, wanted to make sure our team was okay. Next, immediately reached out to our customers in the area to make sure they knew that if they needed us, we were there. We've been arranging care boxes of our nourishing food to be shipped to wherever they want, right? Knowing that right now they may not be able to be in their homes. We're also partnering with a number of other organizations to try to make more of our food available. There are incredible corporate and nonprofit organizations on the ground right now assembling care packages and making sure that people have what they need, but it's a very stressful time, and so we just want to be able to do our part. Obviously recognizing that healthy, nourishing food is one of the easiest things to forget about in these moments, and so we're just trying to help where we can.
And you know, you as Daily Harvest, you know, you have really navigated the complexities through supply chain disruptions during natural disasters like this. Talk to me more about how you navigate through those challenges and the lessons that you have learned along the way.
Yeah, well, supply chain was a term that most folks, I don't think, were really talking about prior to the pandemic, but I think we all as consumers got much closer to the realities of the lack of resiliency in the supply chain systems during the pandemic, and obviously with natural disasters, new challenges emerge. You know, for us, we're always trying to make sure we're able to reach consumers where they are, make sure they have access to the food they're looking for, but also not putting anyone in harm's way. We have, you know, very close connectivity with those delivering our food, you know, those that are growing our food, right? We do not want to be putting people in harm's way in moments of natural disaster, so safety comes first.
And while you're doing all of this, obviously top of mind is sustainability for you, your mission, your goals, like organic and regenerative agriculture to combat climate change.
Yes.
Talk to me more about these initiatives and how you balance all of these things and the complexities at one time.
Yeah, look, I think now's a moment that we have in the ecosystem to be really thinking about a new North Star for the food system, right? A food system that prioritizes nourishment and resiliency for both humans and the planet would be making different decisions. First and foremost, about less than 1% of our farmland is grown organically here in the U.S. The organic practices are foundational for a truly regenerative system, one that grows food that is high in nutrient density to solve the health challenges that we face, and two, that builds health into the soil where the food is grown. And so we've been working closely with other organizations and in some cases direct contracting with farmers to help alleviate the burdens of transitioning land from more conventional pesticide-driven agriculture to organic.
But how do you also go about balancing your more health-conscious customers, especially when it comes to GLP-1 users or those who have dietary restrictions?
Well, the beauty of organic fruits and vegetables is that at the intersection of healthy needs and a more sustainable planet. And so we don't actually have that difficult of a time balancing those needs. In fact, we're able to curate food offerings within our portfolio to help those that, as you mentioned, maybe just started a GLP-1 prescription or maybe have just recently got diagnosed with diabetes, but it's all on the foundation of organic fruits and vegetables, which allows us to make an impact upstream and allows us to partner with great organizations looking to do the same.
And what's next for Daily Harvest? Do you have any upcoming initiatives or product launches that you'd like to share with us?
Yeah, I mean, maybe not surprising to many, but but protein is on many consumers' minds these days. Protein has been one of the most searched items, most requested offerings that we've had for the last couple of years. And so we just recently launched our brand new high protein smoothies, which take the best of our highly known and highly loved ready to blend smoothies and added in 20 grams of protein for each of them. And we're going to continue on that protein train this year with a number of new offerings coming in the months to come.
Well, we look forward to having you back on the show to talk all about it.
Thank you so much.
Thank you so much, Ricky. Now, after the break, thousands of tech innovations were on display at CES 2025. Palmer Group CEO Shelley Palmer joins us next to talk about some of his favorites. Stay tuned. Today we're talking about the future of dining with an iconic brand, P.F. Chang's. With 300 restaurants around the world, they're taking a bold new step into fast casual dining, a new concept called Pagoda. And I have the CEO here to tell me all about it, only on Taking Stock. Now, obviously your focus is your 300 P.F. Chang's that you have around the world. But talk to me more about this new Pagoda concept.
The type of service and food that we serve, which is made from scratch, high quality ingredients, great hospitality, great ambience, and that can be used in more use cases, more need states, more occasions, more people more frequently. So the light bulb moment, if there's one, is wait a second, we can do a great job for you on a lunch during the week. And, and it can be very fast, it can be very affordable, it can be very, very abundant, and of course, delicious. We just have to adapt the way we do things, steps of service, abundance, price points, to be able to serve you this way.
Now, while you're remaining so agile with this ever-changing landscape in the food and beverage sector, how do you sustain your authenticity?
The brand has to know, what they stand for, right? In our case, is every day is a celebration. We want to elevate every occasion and make it special to people, right? So if it's a day-to-day lunch, we created a concept here in the US that we call Express Lunch in our bistros, which is a lunch in 20 minutes or lunches on us. It's the same ingredients, same kitchen, same steps of service, just an individual bowl because that's the occasion there. So understand who the brand is, what the brand stands for, and what the consumer, the customer, in our case, the guests, the way they want to live their lives and adapt ourselves.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Let's take a look at how stocks are faring just about 15 minutes into the open today. We do see decent gains across the board. In fact, the Dow, as you see on the screen there, up about 0.5%, nearly 200 points. Gains for the S&P 500 as well, and that comes after what was a better than expected inflation report. The goal is to get the pace of price gains lessening, and that's exactly what we saw in today's data for wholesale prices for the month of December. It portends what we could see tomorrow when the consumer price index data is released at 8:30 a.m. Eastern, and we will have you covered, of course, here as to what that data means for you and your investments tomorrow morning. With over 4,500 exhibitors at the Consumer Electronics Show this year, innovations of all kinds were on display. Which ones stood out most? It's a great question. And joining me now to help answer this and more is Shelley Palmer, CEO of the Palmer Group. Shelley, it's great to have you on the show this morning, and I'm sure you had a phenomenal time at CES. What were your biggest takeaways from this year's event?
Well, you could smell the paint drying on the letters AI on every single exhibit. It just seems like everybody had something AI-powered toothpicks, AI-powered paper clips. All kidding aside, it truly was the AI show. It was AI everywhere, all the time. You couldn't escape it. Samsung's vision for AI was fairly interesting because they have been incorporating artificial intelligence into all of their products for years and years and years. Standout products for me, the Samsung Frame Pro. It's the successor product to their Frame TV. It's a subscription service. You can get master artwork from the great masters, I should say, to put on your television. But the problem up to now has been the TV itself wasn't that great. They've remedied that by making this an extraordinary television and a really nice picture frame, and it comes in a bunch of big sizes. So a good addition to every living room. Probably the standout at the show was from Kieran. It's a spoon that makes bland food taste salty. And just the spoon, so you could have like plain rice, but it would taste salty. It does that by slightly electroshocking your tongue. I thought I would end up being, like lobotomized by this, but no, it's actually quite pleasant, and it actually works, which is amazing. I wasn't expecting it to work as well as it did. Robots were big too. Let's see, what do we have in robots? A lot of companion robots. As you know, there is an epidemic of loneliness around the United States right now that's actually worldwide, and it's pretty devastating. One of the ways that the consumer technology groups are working to solve this is with robotic companionship. Now, we've seen synthetic companionship with AI in software like Character AI and other models and apps that sit on top of large language models. But here, they've incorporated these tools into some mechanical robots, and they come in two flavors: plush and hard-cased. Apparently, Asian children are very happy to have hard-cased robots, and they will cuddle them and play with them, but American children will not. So for them, they've made fuzzy toys like Tombot's Jenny, which is a little tiny plush puppy, kind of fun. And I think they're all interesting. Whether or not they will take off or not, no one knows, but there were dozens and dozens of small robots for companionship. And then there were a couple of like R2-D2 clones. They don't quite look like R2-D2, some modular, and others were just literally able to, they looked like robots, like Roomba robots with stands on them, so they would be able to carry a tray of glasses, bring you your drink from the bar. Some of them had towel racks on them. Other ones had arms and claws to pick up your clothing. It was kind of fascinating. Everyone's got a vision of a robotic future, and they've taken this concept of the electric vacuum cleaner to the next level, and we've got robots that are running around the house autonomously. So it's pretty interesting CES all in.
All in. It sounds like that indeed, Shelley. Robots, robots, robots. I know another major theme was artificial intelligence. How have we seen AI evolve, and how was that showcased at CES?
So realistically, everybody had a vision for the future that was different. It's a very interesting CES. Normally at CES, everybody's got a theme. Okay, we're going to have flat screen televisions that are a little bit better, a little bit flatter, a little bit thinner, a little bit better picture, and everyone chases that. But this CES was fascinating in that every major manufacturer, Sony, Samsung, LG, TCL, didn't matter where you went, had a different, interesting vision of an AI-powered future. Fascinating. And so for the first time in years, as you walk the show floor, you were getting to see different engineers and different marketers' ideas of what an AI-powered future might look like. And none of them, I don't think, have it right, but everybody had a point of view, and it was fascinating. As probably most people don't think about it, but AI has been incorporated into consumer technology since the beginning of AI. It's always there, but it only became really popular around November 30th, 2022, when ChatGPT became a public product. After that, everybody got all excited about AI, and people who would ordinarily not care about it started to care about it. So we're starting to see that at CES, and I think now there'll be two flavors: the behind-the-scenes AI that powers everything and has been, and the new, more obvious consumer interfaces where you can interact, and where the generative AI tools and the large language models and now reasoning engines come to the fore and empower these consumer products to do more goal-oriented things in our lives as opposed to task-oriented.
Shelley Palmer, CEO of the Palmer Group. Shelley, always good to get your take, especially after the Consumer Electronics Show kicked off many events that we'll see this year. Thank you.
My pleasure. Take care.
All right, well, tech is just one sector making plenty of noise on Wall Street. Another very hot topic is cryptocurrency. And to talk more about that, I want to bring in my colleague, Trinity Chavez. Trinity, hello.
Hey, Kristen, that's right. So Bitcoin is reshaping finance and driving rapid investment opportunities, as you know. The Bitcoin Opportunity Fund just launched its second fund, raising $50 million to tap into growth across industries like finance, energy, and tech. Joining us now to talk more about this is James Lavish. He is the co-managing partner of the fund to discuss the Bitcoin market outlook, the ETF's one-year anniversary, and where smart money is heading. James, it's great great to have you on the show this morning.
It's great to be here. Thank you for having me, Trinity.
Absolutely. So let's just jump right in here. Obviously, Bitcoin has been on quite a rally, especially as President-elect Trump was announced the winner for the 2024 presidential election. As we're getting ready for him to step into this new administration, this new role, how do you see the Bitcoin market evolving overall?
Yeah, that's a good question. Bitcoin it has a ton of tailwinds behind it right now, and they started last year. Actually, started the year before. The first really big tailwind was there's a change in gap accounting, which enabled institutions, the companies, to actually hold Bitcoin on their balance sheet and not have it marked against them. It used to have to be marked to, like, if it went down, it was marked as an impaired asset. But now they can hold it and mark it to fair value. That's a new rule that took effect this year, and that was kind of the start of everything. Then you had the ETFs launched last year. And those ETFs were the fastest growing ETFs in history. You have IBIT, the BlackRock ETF. It gained $50 billion in assets in less than a year. And so absolutely blowout, launch of an ETF. And on top of that, you just had options that were released. So what's really important about those ETFs is that it allows institutions to own Bitcoin in a way that they couldn't before. The institutions had these hurdles, operational hurdles, that they couldn't get over. And now they don't have to worry about things like settlement, custody of keys, where they're going to market, how it's settled, the leverage of it. It's all taken care of, and they can just buy it now just like any other stock. And so that's a really big deal. So that's been happening. And then, as you said, the new administration, and it's pro-crypto and particularly pro-Bitcoin. Bitcoin friendly, and it's been a driving force, and it's going to continue to be a driving force.
And there is the 1-year anniversary of Bitcoin ETF. So what do you see as the key achievements? How do you think that this milestone will continue? What do you anticipate for the rest of this year?
Well, I anticipate that we have Trump coming in just a few days, and he's going to repeal SAB 121, I believe it is, that allows banks to hold Bitcoin on their balance sheets. So that's a big deal. And they don't have to hold it as a liability, so it can be held as an asset. And then with Senator Lummis from Wyoming pushing a Bitcoin reserve bill, the Bitcoin Reserve Act, this is going to be something that will help drive institutional understanding around Bitcoin. And even if it doesn't happen this year, which I give it a kind of a low probability that happens this year, it still is driving that understanding and separating Bitcoin from the rest of the pack, so people can really understand why it is that premier asset, that premier store of value in the market. So that's a and then also on top of it, you've got regulatory clarity that's going to come from this administration that we didn't have in this last administration. And
we're anticipating 12 new crypto ETFs to launch later this year.
Yeah, well, and they're not Bitcoin related, but that's okay. But that does help. It helps people really gain an understanding of the whole universe. And as we have that, I believe that institutions are going to continue to adopt Bitcoin, and they're going to add it to their balance sheets as a separate asset class. And that's really important, and that's going to drive this adoption.
Well, it's going to be it's going to be a very interesting year to see the trajectory of Bitcoin, ETFs, all of this unfolding. I'm sure we'll have you back on the show to talk more about this. Thank you again. That is James Lavish. He is a co-managing partner. Now, as we get ready to end the show, I do want to bring in my colleague, Kristen Scholler, to talk more about, Kristen, we've had an action-packed show today, everything from NRF to CES, and of course, covering the markets throughout the show, as we always do. But we have a lot to look out for this week as we await that CPI data to come out and retail sales to hit on Thursday.
Trinity, you're exactly right. So no shortage of coverage here on NYSE TV Live per usual. Tomorrow we'll have big bank earnings kicking off before the bell. Many NYSE listed companies set to report, as well as that consumer inflation read as we await the Fed decision in 2 weeks. That'll do it for today's show. Thanks for watching.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.